In the midst of the biggest financial crisis in history, Michael Burry just bet the farm. Burry earned hundreds of millions of dollars during the dot-com bubble in the 2008 recession and now thinks he can earn billions in the near future. Michael Burry wants you to see his reported assets, which are quite easy to uncover if you do a search for his portfolio online. Burry owns 11 equities worth a combined $165 million, as well as $3 million plus worth of options contracts. Burry manages $291 million, but his total public holdings are only about $168 million. Where did he put the $123 million that were left over? This video will detail how Burry recently bet big on the impending market crash. Where is Burry's management of the remaining $123 million? We were able to determine where Burry is placing his final bets by applying the method of elimination. Burry has 6 options on how to invest the money that is left over: holding cash, betting on foreign exchanges, buying commodities and farmland, shorting stocks, shorting cryptocurrencies, or betting against bonds. The options that we described are essentially the only areas where Burry may be putting his money because they don't need to be disclosed to the public through SEC filings. Burry predicts that cash will depreciate at an alarming rate, so we can rule that out. That leaves the foreign exchange, a global market where people trade government-backed currencies, also known as fiat currencies. Trading in foreign currencies involves making bets on which fiat currencies will perform better than others. For example, investors could trade their dollars for yuan in order to make a bet on the yuan outperforming the dollar. If the value of the yuan increases, this would enable the investors to convert a rent payment back into dollars. Despite the dollar's rapid depreciation, the foreign exchange market has been performing well. This is due to other nations printing more money than the US dollar does. The problem with foreign exchange is that you have to wager on one currency outperforming another, and as Burry himself indicated, he can't short the dollar because it's so strong in relation to other currencies. The following choice for Burry is to buy farms or products like gold or silver. We're aware that agricultural land and commodities have historically been effective inflation hedges, but only in cases of modest inflation. Because a decline in a currency's value places the government in a precarious position, governments frequently try to preserve the power of their currency during hyperinflation by taxing or seizing assets that are performing well. Burry predicts that the dollar would see double-digit inflation rates, which would place the US dollar in a precarious situation. In a subsequent tweet, Burry elaborated on this idea, writing, "In an inflationary crisis, governments will attempt to destroy competitors in the currency arena: $, Bitcoin, and gold." Given these tweets, it's clear that Burry is unlikely to own any agricultural or industrial assets, hence it would be pointless for Burry to assume the additional risk of taxation or seizure. Burry's next choice would be to short equities. Burry is probably shorting speculative stocks because he believes that stock prices will drop. Burry once claimed that by 2002, 5.2 times as many Microsoft shares were outstanding across the board, 0.3x as of now, and 3.3x by 2009. Amazon traded 5.7 times by 2002, 6.6 times by 2009, and 0.9 times as of now. JPM traded about 0.7 times so far, 5.9 times by 2009, and 3 times by 2002. Enough requires time. It would be reasonable to presume that Michael Burry is shorting equities because it's obvious that he believes that stocks will fall sharply in the near future. The hints suggest that he shifted to outright shorting rather than put options, because he previously had Tesla put options before quitting in October 2021. This is due to the fact that the options premiums increased in price in the same month that he sold his remaining Tesla put options. Given that shorting is a much superior alternative in that scenario, the option premiums were so high that even if stocks like GameStop went bankrupt in 2 years, put option holders would only be up 100%. The upside of 100 is the same when you short a stock, and there's no expiration period. Shorting is the practice of borrowing shares of a stock and selling them on the open market with the intention of later purchasing those shares at a reduced price. Burry is probably shorting stocks himself based on his tirade against others who criticize short selling. Although we cannot be certain, there's a strong likelihood that Burry went from purchasing put options to shorting stocks. Fifth possibility, Burry shorting cryptocurrency. Due to the speculative nature of cryptocurrencies, Michael Burry is bearish on them. He has considered shorting cryptocurrencies in the past, but he's decided against doing so. Burry stated, "I've not been shorting cryptocurrencies at all, and I'm not now. I feel that cryptocurrencies are in a bubble and that most in it do not understand it," in an email to CNBC in late 2021. As a result, we can rule out shorting cryptocurrency as a possibility. Burry's final resort is to short bonds. We are fortunate that Burry essentially confirms that he was shorting bonds. "For what it's worth, I've never shorted any cryptocurrency. This is my third bubble and the biggest I've learned. I've learned a thing or two. 30-year treasuries, on the other hand," Burry wrote in a late 2021 tweet. Burry's latest wager is probably to short through 30-year treasury bonds. What makes Burry short 30-year bonds then? Bondholders who retain their bonds for the entire 30 years will earn a 3% yearly return, as the 30-year government bond yield is now at 3%. Bond yields and prices have an inverse relationship. Therefore, a rise in the bond yield would cause a decrease in the price of bonds. Long-term bonds are typically more impacted by an increase in interest rates. The price of a 10-year bond will decline significantly more than that of a 6-month bond when rates rise. An exponential relationship exists between the bond yield and the bond price. Burry is shorting the most volatile bond by shorting 30-year treasury bond yields. Michael Burry, who in 2008 devised a brand new security called credit default swaps, is renowned for taking on extreme levels of risk. In the first quarter of 2008, he was able to repay 166% of his investors because of this new security. Burry bought put options in August 2021 on the iShares ETF for 20-plus year government bonds before selling them later that year due to the high cost of option premiums. Burry probably shifted to credit default swaps, and outright shorting of credit default swaps acts as bond insurance. If you purchase earthquake insurance for your home, you'll be required to pay a monthly premium. As long as there are no earthquakes, the insurer will continue to make money each month. However, if there are any, the value of your earthquake insurance will suddenly increase to thousands of times what you paid. As long as the bond doesn't default, credit default swaps are similar to purchasing bond insurance. Similar to how earthquake insurance is important during an earthquake, credit default swaps are tremendously valuable during a bond market meltdown. If the bond defaults, investors will have to continue paying the monthly insurance cost. During the 2008 recession, Burry made hundreds of millions by purchasing credit default swaps. Now that the government cannot save businesses, he thinks he can earn significantly more. Burry was fortunate the previous time since he was compelled to sell his credit default swaps prior to the government saving a huge number of businesses. Having said that, he's aware that, given the political narratives currently in place, the financial infrastructure won't be built out a second time. Consequently, the prospect of burying the purchase of credit default swaps on corporate bonds is raised. Burry bought credit default swaps on mortgage-backed assets during the 2008 recession because he thought the housing bubble would burst. It wouldn't be out of the question for him to be shorting banks through credit default swaps, in addition to credit default swap, because he now believes that the existing financial infrastructure will collapse. Burry is probably also shorting 20-plus year treasury bond ETFs, such as those with the ticker TLT. He had to exit his put options on bonds because the option premiums were too expensive. Burry is known for placing contrarian bets, and his most recent holdings are no exception. He invested in GameStop before anyone else, turning $1.7 million into $270 million. His wagers are so peculiar and lucrative that the government constantly looks into him for possible misconduct. Burry is aware that his startling prophecies will come to pass. While the rest of the world is still asleep, Burry recently made the audacious forecast that World War III is going to break out as a result of the shocking invasion of a new nation. Burry claims that a completely new phase of compression is about to begin and that we're just halfway through the current period of misery. Thank you for watching, and we'll see you in the next video.